Hi everyone, it's Aisha Ochuwa again, and I'm here to speak to you about record keeping. I mean, just like the name implies, record keeping is the act of keeping records. Now, record keeping is an important part of running a successful business because it involves the documentation and organization of both the financial and non-financial records of your business. It is important for reference sake. It can help you monitor your company's performance and also to meet up with legal obligations. Once you have records of transactions that went bad and you are correct, you could bring out your records, show to your customer, and you have won the case. It could also help you with legal transactions. It will help you with, to stay away from trouble with the law. So at every point of your business activities, please make sure you have records of everything you're doing. Every single thing, no matter how minute you consider it, keep record. The very first type of record we'll be discussing now is the financial records. Financial records are documents containing the financial activities of a company. They are important to monitor the inflow and outflow of finances into and from the company. They are good to monitor profits and to put a limitation on expenses. They help you with cost reduction strategies and to know where you're crossing the line or going a little bit overboard. So it's important that at every point your daily activities in your business, you keep records of your finances, records of sales, records of money spent on expenses, records on everything you do in your business. Now let's talk about invoices and receipts. These are the documents you receive as proof of transaction. They are important for tracking expenses, for preparing your tax statements, and also for verifying the accuracy of a transaction. The second financial document you should take good record of is your bank statements. Now, what are bank statements? Very simple. They are just documents that show the totality of all transactions that have occurred in your bank account. They show the opening balance, the closing balance, the deposits and withdrawals with time of transaction and date of transaction, and also details of the receiver and the person who carried out the transaction. They show all of these details. Those are your bank statements. And you can also set the time frame, for reconciliation. A ledger is a document that contains the totality of all transactions, all financial transactions that have occurred in your business. Let's talk about for a period of 1 month. So every month, your ledger covers inflow and outflow of cash and transfers. We mean profits and expenditure. Every money that came in, all your sales, the profits. So it covers the amounts sold, profits gained, and money spent. Just like the bank statement, it covers, the bank statement is limited to your bank account. Whereas the ledger covers everything that has gone on in your business, every financial transaction that's done in your business. The ledger covers everything that has come in and has gone out during that period you have set for reconciliation. So the difference between a bank statement and a ledger is that a bank statement is limited to your bank accounts, whereas the ledger covers the entire business, whether transactions in the bank account or cash in the store. It covers everything. That is the major difference between a bank statement and a ledger. So these are the major financial records you should keep at every point in your business. Not only do they help in tax filing and remittance, they also help in the auditing process, helps to make it less time consuming, and helps in your own record tracking too, to monitor how your business is doing, to know how much you've made, how much you have spent. The very next record you should keep, importantly, is the operational record. What are operational records? These are records that monitor the day-to-day activities of your business. Very easy. They monitor the records of everything you do daily. They cover the money that came in, money that went out. That's your inflow and your outflow. Covers your production. If you're into production activities, raw materials you stocked, raw materials that went out, number of goods produced or number of services rendered. If you're into service rendering, it covers all of that. Everything you do in your business on a daily basis, those are your operational records. They are important to keep. If you're into production, it's important for you to know what you did, how many goods you produced during the period of, let's say, 1 week or 1 month, so that at the end of the month, when you're doing your reconciliation, everything is easy. You can easily say, okay, on the first day of the month, we produced 200 200 packs of plantain chips. On the second day, we produce 190. Why is production reducing? Is it not supposed to increase? You know, it helps you in your reconciliation. So you should have an operational record at every point in time. What are the types of operational records? Sales reports, inventory records, production tags and logs, customer records. These are the types of operational records you should keep. Now let's start with sales reports. Sales reports are documents that show the number of goods and services sold over a period of time. So they give information about the purchaser, you know, the person that sold. For example, if you have different sales reps or different platforms, to give the record of the platform it was sold, whether Instagram or WhatsApp or your website, or if it's a working store, it gives information about the rep that attended to the customer, the date and time of purchase, you know, monetary value exchanged, if it was cash or transfer or POS, you know, it gives all of these information. That's your sales records. So the next one is the inventory records. Inventory records are documents that shows the total number of stock a company has at a particular period of time. So it gives information on products that left and came into the company at a particular period. So if, for example, if there was a restocking, it will give a detail about quantity that was available before the new stock came in, and you know, the new stock that came in and the total number afterwards. So that's basically an inventory record, giving information about what the company has for sale at a period of time. The third one is the production tag and log. This is a document that shows records of things that went out and came into the factory. For example, raw materials bought, raw materials available at a period of time, and the number of goods those raw materials were used to produce. So these are production tags and logs. The fourth type of operational records you should keep is the customer records. Customer records are simply details of customers that have patronized your goods and services over a period of time. Their names, phone numbers, you know, addresses, type of goods purchased, quantity, monetary consideration, just all of those basic things. But very important for your own business transactions. Will help you prevent trouble too, because the customer could walk in and say, I bought this pen from you last month and it's not working, I need a replacement. You go through your records and you don't find anything about the customer and you're sure of it. The customer also cannot provide proof of that purchase. That will save you a lot of trouble. Imagine if you did not have that records and you had to struggle with remembrance and start refunding or start replacing, whereas there was no such purchase. So it's important for you to keep customer records at every point in time. They are similar to the sales records but different. Customer records are customer focused. They focus on the customer and, you know, the people that purchased over a period of time. Whereas sales records focus on the totality of sales your company has made over a period of time. So in general, it is important to keep operational records because they help show you your daily progress. They also help you to identify areas of lapses that you need to work on immediately and help you with different strategies for growth. The third type of record to keep is the personnel record. Just like the name implies, personnel records, records of every person that works for your company. Now, these records cover from the CEO, from the Chief Executive Officer, down to the cleaner of your company. You should have their contract of employment, you should have their detailed job description, understand their benefits, their remuneration, everything expected of the company. These are the records you should keep. It also helps in tracking the performances of each person that works for the company, to know when they come in, their attendance, when they come in and when they leave the office. It helps you to monitor who is taking the job seriously or who needs to be replaced urgently. These records are usually kept by the human resources administrators of a company, and they include contract of employment, employee information, employee attendance records, and performance evaluation. Let's start with the contract of employment. A contract of employment is a legal document between the employer and the employee. And this document states the job description, job expectations, start dates, parties involved, remuneration involved, benefits, if any, and the total expectation of the job. So this document is important because it's, you know, gives each party a thorough knowledge of what is expected of them. So the employer understands what is expected of him, the employee understands the job description and everything expected of him during the job period. This contract is important because it helps to checkmate each party. reminding them of the initial agreement because it is documented. So everybody understands at every point, can always be referred to. This is what we agreed upon, both parties have signed, and these documents must be strictly upheld. The very next personnel record you have is your employee record. Yes, this record is employee focused. The first one we discussed is contract of employment. That one is job focused. It has information about everything concerning the job. This employee record is employee focused in the sense that it contains every information about the employee. Name, age, marital status, state of origin, religion, national identification number, driver's license if necessary. Every single thing you need to know about the employee, performance, job description, start date, applicable trainings, attendance, and leave. So this record is important because you need to keep track of your employees in case of an emergency. It also has information about the very next person to contact in case of an emergency, because anything could happen at work. Something could come up. The person could be absent from work for one reason or the other, and you need to contact maybe a wife in case of someone who is married, or a sibling in case of someone who is unmarried. So it's important for you to have detailed information about everyone you employ into your organization. The third type of personnel record to keep is the employee attendance record. As simple as the name implies, employee attendance record. This is a record that keeps track of your employees' attendance at work. Resumption time, closing time, days present, days absent, days on leave, days back to work. All of those records, it just gives them this sense of seriousness, making them understand that every of their activities at work is being documented. So if they are to resume at 9 a.m., they know better than to come anything past 9 a.m. because it will be documented. If they are to close by 5 p.m., they know better than to leave work before 5 p.m. So records like this checkmates your employees. So it's important for you to keep these records. Moving on, the fourth type of personnel record to keep is the performance evaluation record. As simple as the name implies, performance evaluation record. It's a record that keeps track of the employee's performance at work, skills shown, involvement at work, and areas for improvement, if any. This record helps the administrators to make an informed decision on salary increments, promotions, and trainings where necessary. So in all, it is important to keep records of your personnel. Personnel records help you, saves you a lot of trouble and helps in times of emergency. You're dealing with people, you need extra information on how to help them in times of emergency and how to, also protect your business where a loss has been suffered, or there's theft, or anything could come up. It is advisable to have detailed records of everyone that works for your organization. The fourth type of business record to keep are legal records. Legal records are documents that show compliance with the regulatory bodies governing your line of business. These records include incorporation documents, minutes of meetings, contracts, insurance records, intellectual property records, permits, and licenses. Now let's take them one after the other. Incorporation documents are documents that show the legal existence of your business. They contain the name of the company, the official address, date of incorporation, share capital, particulars of the directors, and details of the shareholders. So it's important for you to have your incorporation documents. It shows that you have the permission to even run that business in the first place. The second one is minutes of meetings. These are just records of decisions taken at meetings, business meetings. It could be board meetings, shareholder meetings, or business meetings between the company and suppliers, or the company and customers. It is important to keep records of these meetings because they can be used as legal evidence in case of anything could come up. In case of any issue, trust me, you want to have records of meetings you have had. So the next important documents you should keep after your incorporation documents are the minutes of your meetings. The third type of legal record to keep is contracts. You should have a copy of every contract you enter into on behalf of your business, if it is a business name, or every contract your company enters into with another party. It is important to have a record of each, have a copy of the document. It could come in handy at any point. It could be in 10 years time, it could be in 5 years time. One day it may come in handy. So make sure you are prepared, make sure you have a copy of that document. Apart from legal compliance, for your own sanity and for the safety of your business, have records of every single contract you enter into. The next record to keep is your insurance record. These are just records that show that your company is fully insured against unforeseen circumstances. These involve your insurance certificate, the insurance policy that shows the extent of the insurance coverage, all payments made to the insurance company, correspondences, and every transaction that has gone on, if there are any. So have all these documents. They will come in handy. For example, if something comes up and you need to make use of your insurance policy, you bring out your documents, you show the insurance company. That serves as proof of insurance, proof of coverage. If you don't have that, there's nothing for you to defend your business with. Moving on, you should also have your intellectual property documents. These documents show that your company's assets are fully protected under the insurance protection laws. It could be your trademark certificate, your patent certificate, your industrial design certificate, or your copyright documents. They also include licensing documents and other agreements that show proof of ownership and exclusivity and proof of protection under the intellectual property protection laws. The last type of legal documents you should keep are permits and licenses. These are literally all of the legal accreditations you have gotten in the line of your business. It could be professional licenses, it could be legal licenses, it could be field-specific licenses, but whatever it is, make sure you have a copy of all your licenses. Make sure you have a copy of them. Make sure you have them intact. Have records of them in order to avoid getting in trouble with the law. If the regulatory bodies come asking and you don't have proof of licenses, then you get in trouble with the law. As little as these things seem, you may think they have records and you wouldn't need to keep yours. I promise you want to keep yours because you don't want to assume that these regulatory bodies are helping you keep records of your own licenses. When they come asking, they expect you to provide them. So make sure you have a copy of all the licenses you have procured in line of your business. I know you may think it's difficult to keep records of everything you do in your business, but I promise you, it's as easy as the word is. Records. All you need to do is, sort them as they come. There are easy steps to create a sustainable pattern. Number one, sort by type. Contracts, have a place for contracts, have a place for permits, have a place for your incorporation documents, have a place for your personnel records, sales records, customer database. Have different sections for them. Sort by type. Number two, make use of technology. The world has been digitalized. Make use of technology. Store them on your database. Create a database for them and store them on your database. Get a hard drive or store them on your computer. Send them to your email. Make sure you have a soft copy and a hard copy if necessary. But where there are no hard copies, make sure you have a soft copy of everything, every record. Send them to your different work emails. Make use of technology to store your data. There are different types of firewalls and security protection to prevent people who are not authorized. They could have passwords, you could have biometrics, different things to prevent people who are not authorized from gaining access to your records. You don't want your records to get into the hands of people who should not have access to them. So make use of security measures, data retention processes. There are different ways to make the process easy. The size of your business does not matter. Record keeping is as important to a sole proprietor as it is to an incorporated company. So make sure you keep records. It is important. We have listed some of the importance before, but just to narrow it down. Number one, it helps you with legal compliance. You'll be complying with labor laws, tax laws, and other industry-specific regulations. Because when they come to you, you have all the records to show. So that's the number one importance. That's the first importance. It will help you with legal compliance. Secondly, it helps in financial management. When you have accurate records, you'll be able to monitor your profits, your expenditure, inflow, outflow, help you with better decision making when it comes to financial management. It also helps in the auditing process because the auditors will have detailed records. It reduces the time frame for the auditing and the money paid to the auditors too, because when you've done most of the work, what would they bill you for? But the auditors will start to bill your business when they have to start from scratch. you don't have any record to show them. They have to start tracking from day one or from the very beginning of the month. You pay more money. But when you have your records, you pay the auditors little or no fees. So, I mean, it's beneficial to have your records, right? Also, it helps you with better decision making for your company. You know where your company is at every point. You know the level of growth of your company. You know if you are doing well or the areas you need to improve on. You know if you are lacking behind. When you have your records, you will be able to make better decisions as regards to your company.